There's a wild conspiracy theory blowing up on X right now, and it's sparking major debates about geopolitics, business, and the future of AI. The story centers on a company called DeepSeek. If you haven't heard, DeepSeek is a Chinese company that's developing AI models that are rivaling and in some ways surpassing those from American companies like OpenAI, Google, and Meta. What's remarkable about this is DeepSeek is achieving this while supposedly spending far less money than its American counterparts. For example, when the company released DeepSeek version 3 on Christmas Day, it claimed that it cost under $6 million to train. For comparison, US companies spent 10 times that amount, if not more, to train comparable models. A few weeks after Christmas, DeepSeek dropped another model, DeepSeek R1, a powerful AI reasoning model that's comparable to OpenAI's O1 model. And once again, the claim was the same. DeepSeek didn't need a gigantic budget to achieve its stellar results. Over the past few days, as it's become increasingly clear what DeepSeek has accomplished, the internet has lit up with excitement, debates, and speculation. I'm not exaggerating when I say that this has completely upended perceptions about the AI industry. For years, the narrative was that the US was way ahead when it comes to AI compared to China. Suddenly, it's starting to look like China is not only catching up, it's right there with the US, if not ahead in certain areas. But here's the big question. Is this story as straightforward as it seems? Or is something else going on behind the scenes? Let me be upfront. I'm not an expert on large language models, but I've been digging through analyses from AI experts, and the consensus seems to be that DeepSeek is legit. They've achieved real breakthroughs in AI model training efficiency and performance. But while there's agreement on DeepSeek's technical prowess, the controversy lies in the cost of its models. I mentioned earlier that the company claimed that it spent less than $6 million training DeepSeek version 3, a stunningly low figure that's well below the amount spent by others to train similar models. How did DeepSeek manage to do that? One explanation is that necessity leads to innovation. Due to US export controls, DeepSeek hasn't had access to the full arsenal of cutting-edge hardware, so it's had to be smarter and more resourceful in its approach. Remember, the US has restricted exports of the most advanced semiconductor technologies to China. That includes Nvidia GPUs, the gold standard for training AI models. Despite this, DeepSeek claims that they've managed to work around these restrictions and still deliver world-class results. But not everyone believes them. For example, the CEO of Scale AI, Alexander Wang, alleges that DeepSeek has access to 50,000 Hopper GPUs, a massive quantity of some of the most powerful AI chips designed by Nvidia. Semiconductor analyst Dylan Patel made similar claims on X, while adding that at least some of the chips may have been acquired by evading sanctions. This fits with other reports suggesting that Chinese companies have been able to get their hands on restricted US chips despite export controls. If that's the case, then maybe DeepSeek's success isn't as impressive as it seems on the surface. This blog post by Nathan Lambert, an AI researcher, reaches that conclusion. He says, tracking the compute used for a project just off the final pre-training run like DeepSeek did is a very unhelpful and deceptive way to estimate the actual cost. Lambert estimates that DeepSeek's cost on compute alone, before accounting for anything like electricity, is at least $100 million per year. This skepticism has opened the door to even more speculative theories about DeepSeek's operations and motivations, like the wild idea that DeepSeek could be part of a PsyOp, a psychological operation by the Chinese government. The idea is that China might be exaggerating DeepSeek's efficiency in order to raise doubts about the value of building expensive AI infrastructure. The aim of this PsyOp, presumably, would be to discourage US companies from making massive AI investments. Now, obviously, that's a conspiracy theory. There's no hard evidence to back it up, but it's out there on X. The conspiracy theorists are in the minority, though. Most AI researchers believe that what DeepSeek has done is noteworthy and is a testament to what a talented team can accomplish with fewer resources than the well-funded AI labs in the US. Even Lambert admits that while the cost of operations for DeepSeek is closer to $500 million or even $1 billion per year, well above the $5.5 million or $6 million that's being tossed around, that's still a success considering that DeepSeek is relevant in an industry where AI labs are spending $10 billion per year. The stakes here are enormous. AI is likely to be the defining technology of the next few decades, shaping everything from economic growth to military power. How this race shakes out could have big implications for the balance of power between the US and China, as well as determine which country ends up the global leader in the coming years. Frankly, I have no idea how this is all going to play out from a geopolitical perspective. But I will say that all the panic surrounding DeepSeek kind of reminds me of what happened a few years ago when China's largest chip maker, SMIC, was found to have manufactured 7-nanometer chips for Huawei. The discovery shocked the world and triggered a wave of concern related to China's technological capabilities, similar to what we're seeing with DeepSeek today. But it turned out upon further inspection that SMIC's process behind its chips was far less advanced and far more expensive than people initially thought. Is it a similar story in this case? Are people overreacting about DeepSeek in the same way they did about SMIC before the full picture emerged? We'll find out soon enough. But this story isn't just about geopolitics. It's also challenging long-held assumptions in the technology industry about what it takes to develop cutting-edge AI models. For years, the conventional wisdom was that more computing power translates into more powerful AI models. That's why companies like Microsoft, Alphabet, Meta, and Amazon have collectively spent hundreds of billions of dollars building increasingly powerful computers so they can train these models with enormous amounts of data. And it's why Nvidia, the undisputed leader in GPUs, the chips that power these computers, became the world's most valuable company in 2024. There was, and at least for now continues to be, an insatiable appetite for Nvidia's AI chips. But over the past several months, even before DeepSeek arrived on the scene, concerns arose that the scaling laws, the idea that more computing power and data leads to more powerful AI capabilities, were reaching their limits. OpenAI has reportedly been finding it harder than it expected to develop GPT-5, the successor to GPT-4, which came out in 2023, because the scaling techniques that it used in the past haven't been as effective in improving model performance. DeepSeek adds another wrinkle to this by suggesting that state-of-the-art AI models can be developed with far less computing power than once thought. All of this puts Nvidia in an interesting spot. On the one hand, the company is currently benefiting from record-breaking demand for its GPUs. But on the other hand, doubts about scaling laws and new, cheaper approaches like those from DeepSeek are creating uncertainty about the longer-term outlook for the company. Now, Nvidia CEO Jensen Huang, he doesn't seem worried. He's argued that while the improvements from pre-training, essentially the gains from making models larger and training them with more data, those gains might be slowing down, but they're not going away. He's also said that there are other types of scaling, like post-training scaling and time test scaling. These can also make AI models more powerful, and these alternative approaches still require significant computing power. Jensen isn't alone in thinking that expensive supercomputers will remain essential for driving advancements in AI. Microsoft is committed to spending $80 billion in capital expenditures this year, up significantly from last year. And Meta came out this week and said it'll spend $60 to $65 billion in capex, also up significantly from what it spent last year. Much of this money will go towards gobbling up Nvidia GPUs. And let's not forget about the Stargate project. The collaboration between OpenAI, Oracle, SoftBank, and MGX aims to spend $500 billion in AI infrastructure over the next 4 years. All these moves suggest that US tech leaders don't believe that scaling laws have disappeared, which could bode well for Nvidia. That said, things get murkier as we look beyond 2025. Sure, this year will likely be a strong one for Nvidia, fueled by capex commitments from its biggest customers. That's a bullish signal. But what happens after that? Will the traditional scaling laws continue to hold? And if not, will advancements shift to other dimensions of innovation? I think it's highly likely that AI models will continue advancing one way or another. But who stands to benefit if the approach to improving AI models changes? Nvidia owes much of its success to its dominance in training AI models. But from what I gather, while it's still strong, its position in inference, the stage where AI models are deployed to make make real-time decisions isn't as commanding. So if scaling through inference, otherwise known as time test scaling, is the next frontier of AI innovation, will Nvidia be as successful there? That's a big question. In fact, many of Nvidia's customers have begun designing their own chips in collaboration with companies like Broadcom and Marvell because they see an opportunity to gain an edge in inference where they believe Nvidia's dominance isn't as firm as it is in training. We'll see what happens with that. Overall, I think Nvidia is in a solid position. But it's understandable that investors are feeling uneasy given how much Nvidia's stock has surged over the past few years. Since June of last year, Nvidia's stock has largely been flat as it digests those big gains and investors weigh the sustainability of its growth story. So here's how I'm thinking about Nvidia right now. In the long term, looking out 5 to 10 years ahead, I think the stock will do very well. The company is led by a visionary CEO, Jensen Huang, and it's consistently proven to be a highly innovative company operating at the forefront of massive industries. Whether it be generative AI, autonomous vehicles, or robotics, Nvidia is going to be a big player. But the short to medium term outlook is more uncertain. If we see an AI bubble, I've been on the record as saying an AI bubble is very much possible given most transformative technologies tend to fuel speculative bubbles early on. So if there is that AI bubble, Nvidia is in prime position to ride that wave. On the flip side, if investor enthusiasm about AI starts to cool or concerns about Nvidia's dominance in the market become more pressing, then the stock could face headwinds. Nvidia's profit margins are unusually high right now relative to its own history as well as other big tech companies. I think those margins will eventually normalize, and when that happens, that could be a headwind for the stock. So I like Nvidia long term, but I'm not so sure about it shorter term. I could see it going either way. I'm a buyer on big dips, but I wouldn't be chasing the stock. So DeepSeek has definitely thrown another curveball at the Nvidia story. But while it adds more uncertainty to Nvidia's outlook, I see these new developments as a positive for another area, AI applications. If the cost of AI declines dramatically, that's good for companies that are creating products that leverage AI, whether it's productivity apps that help people work more efficiently, video editing tools that simplify content creation, or generative AI platforms that unlock completely new creative possibilities. And one of the biggest beneficiaries of a decline in the cost of artificial intelligence is Meta. In fact, Meta has been driving for this. The company develops the Llama family of AI models, which, like DeepSeek models, are open source, meaning that anyone can use them for free. Meta's goal with Llama hasn't been to profit from it. After all, it's free. It's to drive down costs for the company and to reduce its dependence on proprietary closed source models like those from OpenAI. To the extent that the achievements of DeepSeek prove that high-quality AI models can be developed at a lower cost, it validates Meta's strategy. In the long run, a lot of the value from AI is going to come from AI applications. And Meta is in prime position to benefit from that, given that it already owns a family of highly popular social media apps used by billions of people worldwide. The company has started incorporating AI into its products, making them more engaging for users and useful for advertisers. As AI continues to advance, we're going to see many more AI capabilities incorporated into Meta's apps, making them even more lucrative for the company. Anyway, that's it for now. I hope you found this video interesting. Be sure to hit the subscribe button and I'll catch you in the next video.